October 24th, 1907. The New York Stock Exchange is suffocating. Brokers circle the money post, like dying men gasping for air. Call rates hit 150%. There's no money anywhere. And one trader, holding massive short positions, has the power to deliver the final blow that would close the exchange forever. Instead, he does something that changes everything. Today, you'll learn the 5-phase military campaign he executed to turn perfect foresight into over $1 million, and why knowing when not to pull the trigger matters more than the shot itself. Drop a comment. What's harder for you, entering trades or exiting them? It's early 1907. Livermore is fishing off the coast of Florida, completely out of the market. He's earned this vacation. The strain of trading has worn him down, and his mind is finally at ease. Then a friend brings a newspaper aboard his yacht. The market has just rallied 10 points and more. Most men would have ignored it and gone back to fishing. But Livermore sees what others miss. Money is tight. Conditions scream danger. Yet here's Wall Street, or the desperate bull interests, marking up prices beyond reason. He can't ignore it. He must see the quotation board. The battle isn't over, and the enemy just made a fatal tactical error. Here's where most traders destroy themselves. They see a rally in a bear market and think one of two things. Either they join it, hoping to catch a quick profit, or they fight it immediately with no plan, no reconnaissance, no strategic positioning. It's like a soldier charging blindly at the sound of gunfire, not knowing if he's running toward a trap or an opportunity. The amateur sees the market as a series of disconnected skirmishes. Buy here, sell there, react to every price movement. They have no campaign, no objective beyond the next trade. And when the real battle comes, they're scattered, disorganized, and out of ammunition. Livermore understood something profound. Successful speculation isn't about winning individual trades. It's about waging complete campaigns. He had studied the terrain, the money markets, the general conditions. He knew a major battle was coming. But he also knew that rushing in without proper positioning would be suicide. So he developed what I call the 5-phase campaign strategy. It begins with reconnaissance, moves to tactical positioning, demands patience under fire, requires decisive action when the moment arrives, and ends with strategic withdrawal at the point of maximum advantage. This wasn't gambling. This was generalship applied to the stock market. Before committing a single dollar, you must diagnose the entire battlefield. Not just one stock, not just one sector, but the complete strategic situation. Think of it like a military commander studying maps before battle. Where are the supply lines? In markets, that's the money supply. What's the enemy's strength? That's the bull interest still trying to push prices higher. What does the terrain favor? That's whether conditions support higher or lower prices. Livermore didn't need to be in New York to know the market was vulnerable. He had studied monetary conditions. Money was tight. Credit was contracting. These were the supply lines of the bull army, and they were cut. The rally he saw in the newspaper wasn't strength. It was desperation. The enemy was already defeated, but didn't know it yet. The amateur jumps into battle without reconnaissance. They see Anaconda crossing 300 and think, I must act now or miss it. They see a 10-point rally and assume the trend has changed. They confuse movement with meaningful change. It's backwards thinking. Livermore learned this the hard way in his early career. He told himself many times that he'd been right about the direction, but wrong about the timing, or wrong about the specific stock. But by 1907, he understood. Being right about general conditions comes first. Everything else follows from that foundation. The amateur trades first and thinks later. The professional thinks first and trades only when the terrain is mapped. The professional does something different. He studies, he waits. He gathers intelligence. Livermore was fishing in Florida, but his mind had already done the strategic analysis. When he saw that newspaper, he didn't need to study further. He had done his homework months earlier. He knew what tight money meant. He knew what desperate bull manipulation looked like. He knew the campaign had already been won. He just needed to collect the spoils. This required discipline most traders can't imagine. Think of it this way. A general doesn't commit his forces because he's bored or because the enemy made a provocative move. He commits them when conditions favor victory. Livermore wasn't interested in action for its own sake. He was focused on winning the campaign. When Livermore came ashore to the Palm Beach brokerage office, he saw the entire market laid out before him. Anaconda was approaching 300. The crowd was talking bullish. They expected him, the famous boy plunger, to fight the rally immediately. But he didn't. Not yet. He made one calculated move. He bought 32,000 shares of Anaconda because it was crossing a key level and his tape reading told him it would move quickly to 340. This wasn't contradicting his bearish stance. This was paying himself wages while waiting for the real battle. A general doesn't refuse easy territory just because his main objective lies elsewhere. He took a quick 30-point profit to fund the coming campaign, but reconnaissance means nothing without the next critical element. Because even if you've mapped the terrain perfectly, you can still lose spectacularly if you miss the second phase of the campaign, tactical positioning. Once you've studied conditions, you must position your forces at exactly the right moment. Not too early, not too late, and certainly not all at once. In warfare, this is called staging. You don't send every soldier into battle simultaneously. You position them, layer them, so you can respond to how the battle develops. Well, watch how Livermore handled the Anaconda trade. The stock moved against him. The telegraph wires went down. He had a paper loss of nearly $100,000. His friend was panicking, but Livermore said, "Don't you worry. It will be all right tomorrow." Why such confidence? Because he had positioned himself based on a clear rule. When a stock crosses a major level, it should continue. If it doesn't, he's wrong and must exit immediately. Here's where amateurs destroy themselves. They position based on hope, not rules. When Anaconda opened at 298 and went to 302, then started fading, the amateur would have held on. He'd tell himself stories. It's just profit-taking. The stock is still strong. I'll wait for it to come back. The amateur enters positions without predetermined exit rules. He has no tactical discipline. Livermore knew exactly what Anaconda had to do to prove his premise correct. It had to go to 310 without stopping. When it fell back to 301 instead, he didn't hesitate. He didn't hope. He didn't wait. He acted. The professional enters with rules and exits by those same rules. Livermore whispered to the telegraph operator, "Sell all my Anaconda 8,000 full shares." The operator was horrified. "Surely you don't mean at the market?" But Livermore insisted, "When you want to get out, get out. No limits, no delays, no hope." The professional understands that wrong positions are like enemy territory. You don't defend them. You evacuate immediately. Oliver Black, a wealthy trader who had learned telegraphy just to verify his orders, told Livermore he'd be sorry, that he'd be buying it back at 320. But Livermore knew better. The tape told him the stock was wrong. They got him out at prices from 299 down to 298. The next day, Anaconda opened below 296. This single decision separated Livermore from the crowd. While others held on to losing positions, hoping for recovery, he cut his loss immediately. But here's what matters. This wasn't emotional. It was tactical. He had taken a position based on specific conditions. Those conditions failed to materialize. Therefore, the position was invalid. Within minutes of exiting Anaconda, he began doing what he had really come ashore to do: sell stocks short. The amateur sees this as two separate trades. The professional sees it as one campaign. The Anaconda trade was reconnaissance. It told him the rally was false. Now he could position his main forces for the real battle. Tactical positioning sets the stage, but it means nothing without the third phase. Because even with perfect positioning, you can still fail if you lack the one quality that separates victorious generals from defeated ones: patience under fire. After positioning comes the hardest part of any campaign: waiting while the battle unfolds. Markets don't move in straight lines. Neither do military campaigns. There will be counterattacks. There will be rallies that make you question your strategy. There will be moments when retreat seems wise. This is where campaigns are won or lost. Livermore positioned himself short. Then he waited. The market rallied. He covered some positions and reshorted. He didn't sit frozen in one massive position. He managed the campaign actively, but never lost sight of his strategic objective: profit from the inevitable bear market that monetary conditions had guaranteed. The amateur either panics at the first counterattack or rigidly holds every position regardless of changing conditions. He confuses patience with stubbornness. Livermore had been stubborn before, holding his positions through the San Francisco earthquake aftermath, and it cost him everything he'd made. He learned that patience means managing positions intelligently, not clutching them desperately. The amateur sees a rally in a bear market and thinks, "Maybe I'm wrong." He covers his shorts at a loss, watches the rally fade, then scrambles to get short again at worse prices. Or he holds rigidly through every swing, his capital bleeding from the friction of fighting every meaningless countertrend. Neither approach wins campaigns. The professional holds his strategic vision while managing tactical reality. Livermore covered during rallies and reshorted on weakness. He was trading around a core position. Think of it like a general holding the high ground. He can send out patrols, withdraw from minor skirmishes, but he never abandons the strategic position unless conditions fundamentally change. What conditions would change his bearish stance? Only one, if money became freely available again. Until then, every rally was a gift, a chance to add to short positions at better prices. The professional doesn't hope the market will accommodate him. He positions himself so that normal market behavior works in his favor. For 4 months, Livermore waged this campaign. He made money, not from one brilliant trade, but from consistent application of correct strategy. By summer, when the market went dull, he cleaned up his positions and sailed for Europe with over $750,000. He had earned it, not through luck, not through one spectacular bet, but through systematic execution of a complete campaign. But the campaign wasn't over. While in Aix-les-Bains, he saw news that smelters had declared an extra dividend, and the market had rallied strongly. The bull interests were still fighting. They were manipulating dividends to create the illusion of strength. Livermore immediately cabled selling orders and returned to New York a month ahead of schedule. Why? Because the enemy had just made another tactical error, and he needed to be positioned to exploit it. Patience kept him in the game and growing his position, but patience alone doesn't win wars. You must also know when to unleash overwhelming force. And that's where the fourth phase becomes critical. Decisive action when the moment of maximum opportunity arrives. Every campaign has a decisive moment. A point where all your preparation, all your positioning, all your patience converges into a single opportunity. Miss it, and you win nothing. Seize it, and you win everything. The professional recognizes this moment and acts with complete conviction. October 24th, 1907. Livermore watched as the money market collapsed. Call rates went to 100%, then 150%. There was no money anywhere. The money post on the exchange floor was surrounded by desperate brokers who couldn't borrow at any price. Without money, they'd have to sell their stocks. Without buyers, prices would collapse. The amateur, even if he's positioned correctly, hesitates at the critical moment. He's waited so long, been through so many false starts, that when the real opportunity arrives, he second-guesses himself. He thinks, what if this is just another shakeout? What if Morgan intervenes? What if I'm wrong this time? Or worse, he's already exhausted his ammunition on smaller battles. He's traded so much during the campaign that when the decisive moment arrives, he has no capital left to deploy. He's won minor skirmishes but lost the war. The amateur confuses activity with achievement. The professional has conserved his forces for exactly this moment. Livermore had enormous paper profits and fresh capital. He knew that sending sell orders into that panic would create a cascade that might close the exchange. He had the power to strike the final devastating blow. But here's where generalship transcends mere tactics. Livermore recognized that total victory might be Pyrrhic. Destroying the market completely would make it impossible to convert paper profits to real money. Worse, it would damage the country. So he made a decision that showed true strategic mastery. He turned from bear to bull. When the president of the stock exchange and J.P. Morgan organized the rescue, when a prominent banker sent word through a broker asking Livermore to stop selling, he had already begun buying. Not because he was asked to, but because his campaign objective was accomplished. He had positioned himself perfectly for the panic. Now the campaign called for strategic withdrawal with maximum profit. He bought 100,000 shares that day for the long account. He didn't sell another stock short for 9 months. This wasn't weakness or compromise. This was what complete strategic thinking looks like. He made over $1 million by knowing when to attack and, just as importantly, when to stop attacking. The newspaper said he'd made several millions. The street said he'd been king for a day. What mattered to Livermore was this. He had looked ahead, followed a clear plan, and won the campaign. Not by luck, not by hope, by intelligent warfare applied to the stock market. But even decisive action means nothing without the final phase of any successful campaign. Strategic withdrawal while preserving your gains. The most dangerous time in any military campaign is after victory. Armies become careless. Generals become overconfident. Troops celebrate instead of consolidating. In markets, this is when the greatest fortunes are lost. The trader who wages a brilliant campaign then gives it all back because he doesn't know when to stop. Livermore understood this perfectly. He could have stayed short, could have continued hammering the market, but he recognized that conditions had changed. The panic he'd anticipated had arrived. Morgan had intervened. The time for being short was over. Holding those positions would have been fighting the last war. The amateur doesn't know how to exit. He holds winning positions, hoping they'll become even bigger winners. He fights new battles with old strategies. Livermore himself had made this mistake after the San Francisco earthquake. He'd been right. had made $300,000, and gave it all back because he stayed bearish after conditions changed. The amateur also mistakes strategic withdrawal for defeat. When Livermore turned from bear to bull that October day, others might have seen it as capitulation. But it was the opposite. It was the mark of a complete strategist who understood that campaigns have endings. You fight until objectives are achieved. Then you consolidate and prepare for the next campaign. The professional withdraws strategically. He doesn't suddenly reverse every position, but he stops pressing his advantage when conditions no longer support it. Livermore didn't just stop being short. He actively went long, buying at the bottom, helping to stabilize the market while securing his own profits. Think of it like a general after battle. He doesn't leave his army exposed in enemy territory. He withdraws to defendable positions, secures his supply lines, tends his wounded, and prepares for the next engagement. The professional knows that the market will present new opportunities, but only if he's preserved his capital and his mental clarity. Livermore ended that day worth over $1 million. But his real wealth was something else entirely. He had proven to himself that he was no longer a gambler. He had waged an intelligent campaign from start to finish. He had studied conditions, positioned early, held patiently, struck decisively, and withdrawn strategically. Years later, recounting this period, he said his biggest winnings weren't in dollars, but in intangibles. He had been right. He had followed a plan. He had learned to trade intelligently in a big way. He was permanently out of the gambler class. That October day marked his transformation from opportunistic plunger to strategic campaign operator. Let's bring this complete system together. Livermore's genius in the 1907 campaign wasn't in any single trade. It was in the integration of 5 military phases into one coherent strategy. The 5-phase campaign strategy is a complete top-down methodology for professional trading. It begins with reconnaissance, studying general conditions to anticipate what must happen. Livermore knew tight money meant lower prices. Period. It moves to tactical positioning, entering when conditions are right and exiting immediately when proven wrong. The Anaconda trade demonstrated this perfectly. It demands patience under fire, managing positions through countertrends while maintaining strategic vision. 4 months of campaign trading, not one desperate bet. It requires decisive action at the critical moment, striking with full force when opportunity is maximum. That October day, when panic arrived exactly as foreseen, and finally, strategic withdrawal, securing gains and avoiding the fatal error of fighting yesterday's battle. Turning from bear to bull when the campaign objective was achieved. This is not a trading pattern. This is not a technique. This is a complete military discipline applied to speculation. Here's what this really means. The 90% who fail see trading as individual battles. They buy here, sell there, react to every wiggle. They're driven by hope and fear. They see a rally and jump in, see a decline and panic out. They have no campaign, no strategy, no discipline. The 10% who succeed see trading as warfare. They have cultivated strategic thinking. They see the same price movements and understand what those movements reveal about underlying conditions. They position before the battle, not during it. They manage campaigns, not trades. This system transforms speculation from hoping and gambling into intelligent warfare. It is a methodology that allows you to profit consistently because you're fighting campaigns on terrain you've studied, with forces you've positioned, at times you've chosen. Now, let me be clear. This is not easy. Livermore himself said the hardest thing was sitting tight, waiting for the right moment. This system will not make you rich overnight. It will not give you 10 baggers on every trade. What it will do is put you in position to profit when major moves occur. But only if you have the discipline to study, position, wait, strike, and withdraw. Most won't, will you? So here's my challenge to you. Take your current trading and analyze it through the 5 phases. Are you doing reconnaissance, actually studying general conditions? Or are you reacting to price movements? Are you positioning tactically with clear rules, or hoping trades work out? Are you patient under fire, or panicking at every countertrend? If you're serious about understanding Livermore's complete methodology, you need to read Reminiscences of a Stock Operator by Edwin Lefebvre. This isn't just a trading book. It's a manual for thinking strategically about markets. The chapter we've analyzed today contains more wisdom about campaign trading than most traders learn in a lifetime. And for those who want to see how this 5-phase strategy applies to modern position building, watch this video next where we break down Livermore's pyramiding techniques. If this changed how you think about trading as warfare instead of gambling, hit that like button. Subscribe for more deep dives into legendary trading strategies. And drop a comment. Which of these 5 phases do you struggle with most? I read every comment. Remember, This video is for educational purposes only. This is not investment advice. Livermore's campaign strategy requires extensive study, disciplined practice, and significant capital. Always do your own research and never risk more than you can afford to lose.